Welcome everyone. I am so excited to guide you through this explainer on Johnson & Johnson's Q2 2026 earnings, where we're going to unpack some absolutely massive corporate milestones they just reported. We have a ton of fascinating data to get through today, so let's jump right in.
Okay, let's dive into this. The absolute headline number for the second quarter is a staggering $25.3 billion in worldwide sales. That represents a very healthy 6.6% reported growth over the prior year. To put that into perspective, they are generating over $270 million a day in revenue, every single day. It's a massive figure, and it really sets the tone for everything we're going to look at today.
Now, CEO Joaquin Duato made a pretty bold observation about this momentum. With quarterly sales surpassing that $25 billion mark, JNJ is officially on the precipice of crossing $100 billion in annual revenue for the first time in the company's 140-year history. I mean, that is a monumental target, and this quarter was a giant leap toward it.
To understand exactly how they're pulling off this historic push, we've broken our agenda down into 5 areas. First, the road to $100 billion. Then, innovative medicine performance, medtech driving growth, their capital allocation strategy, and finally, the updated 2026 outlook.
Section 1. The road to $100 billion. Let's set the macro stage and see how this massive revenue actually breaks down geographically. As you can see, the U.S. market is really leading the charge here, bringing in $14.5 billion and growing at a strong 7.3%. It highlights this incredibly powerful domestic stronghold, which is complemented by a massive $10.8 billion from international markets. So we're looking at a truly global footprint.
So, the crucial question is, how exactly are they achieving this total? Well, it's by relying on what we can call their twin engines. On one side, you have the powerhouse innovative medicine segment, bringing in an incredible $16.38 billion, and running right alongside it is a highly robust medtech segment, generating $8.92 billion. These two pillars are the absolute foundation of J&J's push to $100 billion.
Section 2. Innovative medicine performance. Let's take a closer look at the growth drivers fueling this larger engine.
The innovative medicine segment delivered a very strong worldwide operational growth of 6.8%. And you know, this isn't just passive growth. This engine is being actively fueled by an aggressive wave of new product launches and some pretty significant market share gains across multiple therapeutic areas.
When we look at the specific breakthrough products driving the surge, it's fascinating. In oncology or cancer treatment, drugs like Darzalex are just capturing massive market share. Over in immunology, Tremfya is gaining real momentum for inflammatory diseases. And in neuroscience, treatments like Spravato are seeing huge spikes in patient demand. So they have a highly diversified growth portfolio working for them.
But, hey, to keep things perfectly objective, it hasn't all been smooth sailing. J&J faces very real market pressures, primarily from biosimilars, which are essentially generic alternatives to complex biologic drugs. For example, competition against their drug Stelara created a roughly 7.6% or 760 basis point drag on the segment's results. On top of that, Imbruvica and Remicade saw decreases due to competitive pressures, share loss, and unfavorable patient mixes. It's a complex landscape out there for sure, but the overall growth engine keeps pushing forward despite these drags.
Section 3. MedTech driving growth. Let's flip over to the other side of the business and look at precision and volume.
The medtech segment delivered a solid worldwide operational growth of 3.6%. This growth was driven heavily by strong commercial execution and ongoing, relentless innovation across their diverse device portfolios, proving that their second engine is firing very reliably.
Drilling down a bit, the cardiovascular space was a major standout here, fueled by electrophysiology and double-digit growth from Shockwave. We also saw really strong performances in surgery, with biosurgery growing around 9%. There were great results in vision, driven by the AccuView Oasis one-day contact lens family, and solid orthopedics growth spurred by trauma and their new hip and knee product launches.
Of course, this growth didn't happen without a little friction either. The segment had to navigate headwinds like value-based procurement in China, where government bulk buying policies really squeeze pricing margins, as well as lower procedure volumes for Abiomed in the US. But despite these hurdles, the segment still posted that really solid operational growth.
Section 4. Capital allocation strategy. With all of this cash flowing in from two massive engines, how exactly are they fueling the future?
Well, for the first half of the year, they reported approximately $8.7 billion in free cash flow year to date. That is cold, hard cash left over after operating expenses, which gives the management team incredible strategic flexibility to invest, reward their shareholders, and maneuver on a global scale.
And their strategic priorities remain crystal clear and entirely unchanged. The absolute highest priority? Fueling organic growth, with $7.2 billion already invested in research and development year to date. Right behind that is delivering competitive dividends, returning $6.4 billion to shareholders so far this year. These sit firmly ahead of their lower priorities, which are investments in mergers and acquisitions and share repurchases. So they are very clearly prioritizing internal innovation first and foremost.
Section 5. The updated 2026 outlook. Let's tie all these segments together and look at their upward trajectory.
Because of this remarkably strong operational performance in the second quarter, J&J actually raised their full-year 2026 guidance. They moved the estimated reported sales midpoint up to a massive $101.1 billion, which represents 7.3% growth over the prior year. They also bumped their adjusted earnings per share guidance midpoint up to $11.68. It's a very clear signal of confidence from the executive team in their near-term execution.
So the crucial takeaway from all of this is pretty straightforward. Despite complex regional headwinds and some really fierce competition, the sheer scale of J&J's diversified portfolio is working. They are firmly on track for that historic $100 billion milestone. It's a massive scale that ultimately funds the next generation of global medical breakthroughs and cements their position as a true titan of healthcare.
Which leaves us with one final, pretty exciting question to ponder as we watch this 140-year-old company evolve. Once they actually cross $100 billion in annual revenue, what is their next wave of healthcare innovation going to look like? Thank you so much for joining me on this explainer. Keep questioning, keep learning, and I'll catch you next time.